I am so excited that we decided to sit down together and have a conversation. We talk to each other more than I think either one of us wants to admit, and our teams, know each other. And I with so much respect going back and forth how we both, do our, handle our businesses and represent our clients. We talk a lot about what we do to each other and also those, to our clients. But it's sometimes hard to get that out and share what we do and how we do it and why what we do matters to the outside community, and to sit down and actually have a nice back and forth conversation with some fun questions and answers, some dumb questions and answers, and some really meaningful nuggets of value, I think is a great way to be able to kind of inform the general community of insurance agency owners of what agency-focused and legacy advisors do for them.
Yeah, I'm excited. Let's do it.
Let's jump in.
Let's do it.
There's a number of questions that I've gotten about, what a fractional CFO would do and the services you offer. So some of my favorite ones I wrote down. I want to run them by you, and you can maybe do the in reverse. You can share, some of the questions you've heard about, what we do.
Yeah.
First, to just kind of lay up one was like, why would an insurance agency hire a fractional CFO?
Yeah, it's a great question because, the average agency is maybe 7 employees, maybe they're bigger, maybe they're smaller, but the reality is most independent insurance agency owners don't have a background in finance. So numbers are not their forte, people are their forte, coverage is their forte. So the reason you hire anyone is to augment your weaknesses and really strengthen the team you put around you. And for me, a lot of agency owners want some confidence in the decision they're making. They want clarity in where should I be focused, and we can provide that. We can help them understand how their business is doing from a financial standpoint and help clarify that, simplify it a bit, and give them the confidence they need to move forward with all of the information, rather than sometimes feeling like you might be flying blind if you don't have that clarity. So that's really the key thing we hope to do as an extension of their team.
Yeah, and I also imagine that a majority of insurance agencies around the country aren't large enough to warrant having a full-time CFO on the team.
Yeah, in fact, I even hesitated calling it Chief Financial Officer because it'd be crazy to have that in a small organization, but I didn't have a better way to communicate what it is. But never would you be able to hire someone at that level. So taking it as a fraction makes a whole lot more sense. And what's really cool is being able to work with multiple agencies. You get a purview that the average agency owner doesn't get. You get to see how different agencies are dealing with some of the same challenges and help someone weigh the pros and cons in their own agency by having that purview. So fractional is what, in my mind, makes it so much more powerful.
Oh, yeah.
Yeah.
Yeah, because if you had an internal CFO, they're only going to have the insight of your business and maybe businesses that they've represented in the past or worked with in the past. But from your perspective, you're seeing hundreds and hundreds,
that's right,
if not thousands of agencies that how they tick and all the benchmarks that come with that.
Yeah, which gives me the ability to help clarify some of the questions and say, the average agency might respond this way, or they might contemplate these types of decisions in order to navigate forward, and an internal CFO might not be able to do that. So
what's one of those, just on that same topic, what's one of those questions that you feel like most agency owners, before they work with you, they don't know the answer to, but they should, and they ask you, and you feel like by offering that information, you're really leveling them up?
Yeah, I think the biggest asset inside an agency is also your biggest expense. So it's typically around people. What should I expect from my people? When should I hire? What are the benchmarks for efficiency and productivity? That is probably the area we spend a lot of time and energy, especially as the environment's changing around us. So as you add complexity with technology and virtual assistants and AI, that question becomes bigger and bigger and bigger. And how do I weigh it? So I'd say that is one of the biggest things. How do I accurately and how do I set my agency up and staff that appropriately and allocate my resources appropriately? I think that's one of the biggest things we wrestle with.
That's great. Yeah, I know that when we were in that process of building the business, one of the burning issues we always had was forecasting with payroll and with staffing associated with the client base that we didn't even have yet, but we knew we were going to have. And that's really hard to do on your own.
Yeah. And you know, a lot of agencies will say, I'd like to double in size in the next 3 years. And putting that on paper of exactly what that would take, what's your growth rate, what retention rate do you need to be, and showing what would have to happen inside the agency from a human capital standpoint, but also from an expectation of performance is much easier to execute if you can see it, but most agency owners really don't know how to forecast that. So they enlist us to help put that plan in place and show what those trigger points would be.
Brilliant.
So, yeah.
Love that.
Yeah.
Is there typically either a size of an agency or where they are in their process or the profile of the owner that makes the most sense to work with you?
Yeah, I get asked that a lot, actually. And, you know, I think we have a target market. There's no two ways around that. But the reality is, whatever size you are, whatever age the owner is, it's really about the mindset. Are you looking to go from A to B? Do you want advice? Do you want to think differently? Do you want to surround yourself with people who can challenge your thinking? And if that's the case, you definitely need someone on your team that's going to think differently. If you're happy with the status quo and you are thrilled with where you are, I don't know that you want our team helping you. So I think number one, you have to have the mindset that you want to go from A to B and you're not 100% sure. With the team you have today, you've got everybody in your tool chest that in order to get you there. Then there comes, sure, you have to be at a certain size. I mean, we charge a fee, so you need to have the financial wherewithal in order to be able to pay that. Engaging with us is not an expense, it is an investment, and typically you see the performance of your agency change. You will always see the value of your agency change as long as you're taking the advice. And so I can't really say it, you have to be this exact like size from a staff standpoint, age of an owner, years in business. It really is a mindset. And we've had the gamut. You know, I want to work with agents that want to have as many options as possible and they want to grow and perform. So
I know that when we were growing our agency, one of the limitations was, you know, we wanted to be really aggressive with our growth and our strategies.
Yeah.
But we didn't want to be so aggressive that we could put ourselves in really financial harm.
Right.
And if we had a service like Agency Focus and working with someone like you and your team would have given us the backing of confidence that we can be super aggressive and here's things we need to look out for. So when you're having those conversations with new clients, do you feel like they are asking for that same thing, basically? Like, I have these goals, I want to be aggressive, but I also don't want to make big mistakes. Like, can you help me avoid those mistakes?
Yeah. So it's funny that you said a couple of things that we haven't touched on yet. And some agents are, I want to grow. And I'm going to buy as many leads, I'm going to add as many producers, I'm going to do all these things, but I also want to grow by acquisition. We can help balance that because honestly, it's difficult to do both. Like if you're investing in your infrastructure and your staff, you might be taking a lot of the profit and putting it towards building organic growth engine. But if you also want to grow by acquisition, they're going to look at the debt load that you have and you want to be able to position yourself to execute well on both. So yes, I think many are saying, how do I find the balance? What do I need to do? Are there things that I need to clean up so I can open up the gateway for me to be able to execute on both? And when will I be ready to do one or the other or both? So thinking about how to manage debt is a big part of what we do, and manage cash flow and honestly support growth in either format. So I think we're also able to be pretty objective about it rather than someone who's in it and maybe more emotional about some of those decisions.
Do you sometimes have to tell someone you're doing a great job growing organically, you're dumping a lot of your profits into producers
Sure.
and additional staff and support and marketing and advertising and lead generation, continue to do it because it's working, you're growing, shelve the acquisition
Sure.
strategy, or vice versa. You're doing a great
Yeah.
job acquiring, you're not growing organically, but you're doing one.
Yeah, I think sometimes it's the FOMO is real and they hear other people are doing that, and I have to provide perspective to say, hey, listen, you've decided this path and it's working. Double down on it, because the alternative could mean you would take a hit on your growth and maybe not get the performance that you want. And the grass is not always greener. So it is, that's part of our job, is to help weigh. I don't make the decisions for any agency, but I help them weigh what's out there. And, the comparison game can be healthy, but it can also be a really big challenge,
Yeah, it's tough, because if you're someone who started your agency 5 to 10 years ago and you're growing it really well, you've added some good people, you've got a good culture, your organic growth, maybe your profitability is lagging, but just because you haven't grown into that yet, and you're looking at someone who's third generation,
right,
who has a large agency with producers that have been there for many years and a really good profit margin, they can go get a lot of debt and not worry about the cash flow.
Yeah, it's not apples to apples at all, right? Yeah, so you have to know where you are in the life cycle, and I think having a gut check with someone that can give you that perspective, and sometimes it's keep doing what you're doing, put your head down, you're on the right path, and being able to put that in a projection to say, oh, okay, I can see that if I keep on this path, the trajectory is there. Or put it on paper to say, if you keep doing this, you're not going to be where you need to be, and we've got to change something. So I think perspective is everything, and having someone who can look at many different agencies, apply it to yours, and give you that perspective is key.
In terms of an agency who's looking to acquire other agencies, and they're a little concerned about taking on debt as it relates to the value of their business, how do you help them see the influence that could have on their future enterprise value relative to the debt that they have?
Well, anyone who's working with us on a regular basis, there's an annual valuation that's being done, so they're able to see that kind of in real time to say, okay, here's the investment we made, this is what it did to my growth, this is what it did to my risk, this is what it did. So we do an ongoing valuation that's definitely in the projection. And sometimes it's the reason not to acquire. Like, there are times that it's just not the right fit. Or they're doing little and they will prevent themselves from being able to do an acquisition because of their debt load, and that's not the right move for them. So I think it's, again, that's part of our, it's not just day to day. We've got to give you the vision that's, what does 3 years look like? What does 5 years look like? Yeah. So.
And there's transactional costs and time and resources associated with buying a business, even if it's a small business, and sometimes more if it's a small business.
Yeah.
And so
oftentimes more.
Helping someone probably say, you could make money on this, but the opportunity cost is significant, because if something comes along that looks like this, and you could get better arbitrage and maybe more resources, additional carriers you don't have, you won't be able to do that.
Right. Or, the tax on your staff, and you're already understaffed, why in the world would you bring an acquisition and put that on top of them when you already are talking about, I don't have the capacity? Let's work on building the capacity and the process, and maybe tiering your accounts so the workload looks different, and then you're set to acquire. But, trying to do it all at the same time, that is not a good recipe. Right?
Yeah.
Yeah.
This isn't a question, but it's a topic I'd love your feedback on.
Sure.
Maybe it is a question. And it's one of the most common issues / opportunities we see with multi-generational agencies, which there's a lot of them out there.
Yeah.
Where father-daughter, mother-son, father-son, whatever the dynamic is, there are two generations that typically the older generation owns the business. The younger generation works in the business, maybe has aspirations to take over that business. And the challenge that we see, and I'm sure you see it as much, if not more, is that in order for the one generation to pass it to the next, they would have to pass that on with a steep discount relative to what the market could generate, and at the same time burden the next generation with a significant amount of debt just to make that work. And so there's a struggle with like, how do we make this work? Do you see that a lot?
All
and
the
like,
time.
How do you help someone through that?
So it really boils down to what's most important. And I often find myself in a situation where the financial advice that I'm giving is secondary to some emotional. Like, it's just almost like, I used to say, I'd be super valuable if I had a finance degree and a law degree with what I do. And the reality is I'd be really, really valuable if I had a finance degree and a psychology degree to help with some of these decisions that you're making. And so typically we have to weigh, what does an internal look like? What is that discount? What does it mean to the exiting owner? What does that mean to the owner, the future owner? What kind of debt is that creating, even at a discount? And be honest, like, are you willing to take on the debt? Are you willing to take on the responsibility? What are the other things that are going on in your life? And oftentimes, we find a happy medium that you can get a higher price by selling partial agency, having that future generation be the successor that has ownership in maybe the buying or maybe some retention of the ownership of the agency, and we can create a win-win. And if that happens, we typically refer them to someone like you to go to market and find out who those buyers are. But the moment the incoming buyer's not willing to take the debt, or the external, the one that's exiting, it's too deep of a discount, we have to really get creative.
Can you summarize the services that matter most for your clients?
Yeah. So I will say it's not cookie cutter, and it's meant that to not be cookie cutter, but every single one of our CFO clients gets a certain baseline of things. Number one, we want to make sure that we're creating clarity. So we have to understand their financials, benchmark them to the industry standards, create a budget, create a forecast, and understand and document what are the goals. Because I can't create a forecast without knowing where you're trying to get to. That's the standard for everyone. But then once we go through this process and we benchmark you, we identify opportunities to maximize the value of the agency. It could be that they're looking to transition internally, and we'll help with what does that look like. It might be they're positioning themselves for an external sale, and we'll also identify how can we make this agency have as many opportunities as possible. And that could be restructuring, it could be a staffing challenge, it could be there's producer-owned books and we need to purchase those back. Like, lots of different projects fall out. But first and foremost, we need to understand, where are you going, where are you today, and how do we create the opportunity to get from A to B.
Yeah, because I would imagine everyone has a different goal. Some want to just grow,
right?
And they want to, maybe they've grown organically, and they either need to make sure they continue to do that profitably with a mind on focus on profits, or they want to start growing inorganically and they want to leverage your advice as to how to do that effectively. Because I imagine, like, if you haven't purchased a book of business before, it's probably a little intimidating, and they would need your support.
Yeah, they want to know, what do I look for? Like, and how do I know that this book is right for me to even be the buyer? So we can help with, how do you create your profile of what you're interested in buying? And is it going to strengthen the agency, or is it actually going to create some weaknesses that you didn't have prior because you're trying to go outside what your scope is? So yeah, there's lots of different ways to go with it, but getting that baseline allows us to be a true advisor and a true extension of their team. And if I don't have that, it becomes very, very difficult. Yeah,
so there's I love that there's almost like a set baseline where let's just make sure that we have a full understanding of what the business looks like, how it operates, and make sure we optimize it. But then we'll be your sounding board and your advisor as you go in terms of whatever your short-term, medium, and long-term goals are. We'll be there for you to help.
Yep, for sure. And the reality is, I run a business. you're an owner in several businesses, you have been, it's a little lonely to make these decisions on your own. Having somebody that has full awareness of your business allows you to have much deeper conversations with that person, and takes a little bit of that stress off of just you to say, hey, if I call this person and say I'm contemplating hiring, or I'm contemplating acquiring, or I'm contemplating maybe now's the time for me to sell, I don't need to ask 3 million questions in order to give sound advice. I know it, and I'm able to be way more effective then. Yeah.
Yeah, that makes a lot of sense.
Yeah. So I have a question for you. Obviously, we work with lots of agencies, and when the time comes to think about the future, they don't know if they should go it alone, if they should get help. Why, in your words, you went through that process. So why should an agency seek out a broker to help them through that process? How would you answer that?
Selling the insurance agency in whatever form that looks like is arguably the biggest decision, if not second biggest, after starting the agency.
Right.
That you can ever make, not just in your professional world, but one of the most important decisions you ever make in your life.
Yeah.
It comes with significant emotional considerations, psychological, hurdles that have to be overcome. It can create generational wealth, and so it's a significant decision.
Sure.
And anything of that significance should not be made alone. I think that whether it's a broker, advisor, banker, and I think that each word kind of brings a little slightly different approach. But if it's an M&A advisor who is helping you, navigate that challenging process of significant weight around, like, what do I do? How do I do it? Making all the decisions that I should be making, asking all the questions I should be asking, so I never live with regret afterwards. Yeah. I think that is the role of what a broker or advisor, really should deliver. And I think that's why that role is so valuable, is because it's such a big decision. No one should be making it alone.
Yeah.
I'd say that the word broker, at least the way the connotation that comes to mind is almost a middleman, someone who is a matchmaker almost.
Yeah, right.
They find a group of buyers, they find a group of sellers, they try to connect the two. I think advisor kind of captures what I believe we do at Legacy Advisors, but also what I think is best for the agency owner, which is really shepherding them along their journey and really making sure that at every stage they make all the right decisions. They uncover all the stones, they ask all the right questions, they prepare the right way, so that afterwards they can always look back and feel like they executed when it mattered most.
Yeah.
And that's really what we're delivering, and that's what an M&A advisor should deliver, is that assurance that they made all the right decisions at the moment when they really needed to.
And they considered everything. So, I'm glad you drew the distinction between broker and advisor, because there's a lot of noise. There's a lot of things out there. And one of the things is it the seller that pays for this service? Is it the buyer that sells or that pays for this service? How exactly does it work? And how do you answer that?
We get that question all the time. And one way to look at it is whether the buyer is paying a broker or a seller is paying an advisor, it's coming out of the same pot. If it's the buyer who's paying for it, they're basically going to discount that purchase price by whatever fee they're going to pay. So that's one way to look at it. The other way to look at it is, I think if a buyer is paying the fee, is the broker working for the seller or the buyer? And how many buyers does that broker have an agreement with to get a fee, and are those fees the same?
Yeah.
When the buyer is paying the broker, it can create a little bias that the seller feels like, am I getting taken out to all the potential acquirers?
Right.
Am I going to be exposed to the best partners for me, not just the best price, but the best partners for me? Or am I just going to meet the buyers out there that the broker has relationships with?
Yeah.
And if one buyer is paying 5% or 7% to the broker and more than another one, are they going to be pushing them more? So I think that's one way to look at it. I think that when the seller pays an advisor, there's a level of objectivity and alignment where you're fully, truly representing the seller to find the best possible partner for a day two culture that really they want, as well as maximizing the deal value, no matter who that buyer might be.
Yeah. When an agent is contemplating, I don't want to go this alone, one of the biggest questions we get is, but is this fee some percentage of the deal fee that I have to pay to an advisor or a broker, is it actually worth it? Or is there a threshold where it's not worth it?
Mm-hmm. That's a really good question. We get that a lot, and one way to look at it is how we frame that expense. Is it looked at as an expense?
Yeah.
Or is it looked at as an investment? And one of the first things we'll tell an agency owner is we're not sure yet until we actually dig in, right? Mm-hmm. It may or may not make sense for us to work together. And so the beginning stage, as it should always be, is very exploratory.
Sure.
And it's educational and it's informative. And we say, even if we don't work together, we want you to feel better and stronger and be more empowered after we have a conversation.
Yeah.
If it makes sense for us to consider working together long term, then of course we want to make sure we're upfront about the fee. And in the last, call it, year, we've had 7 different clients come to us with a letter of intent, an offer in hand, and good offers. They just got them directly from a buyer, and they're not sure. They're not sure if it's the best they can do. They're not sure about the terms of the deal, and they're not sure if it's the right partner. So they ended up engaging us, and we took them through the process. And on average, we were able to increase the outcome, their actual closing proceeds, by 33%. Net of our fees.
Wow.
So, if we're charging anywhere between 3 and 5% of the deal, but we're able to generate a 30 to 35% return, it's a 10x return on their. So it's looked at. I see it as a complete investment. I know going through the process myself as an agency owner previously, I probably would have left a lot of money on the table, way more than whatever fee I paid, the banker we worked with. And that's really the way we explain it. And the way we can generate those types of returns is through a variety of different moments in that life cycle, the journey of the client selling the business. Up front, it's just making sure that their pro forma is optimized.
Yeah.
If there are things that we can do, and there's a lot of adjustments in the pro forma when you're going through it alone, you don't know that you can make.
Yeah.
A buyer might agree to those adjustments, but you have to ask for them. You can't just assume they're going to give it to you.
Yeah.
And those adjustments, even if it's a couple $1,000s, if that's multiplied by 8, 9, or 10 times, it's a significant outcome.
Sure.
So a lot of times we'll pay for our fee just in that first moment of reviewing a general ledger and determining there's a few adjustments that can be made. But then if further on the process, just creating a competitive environment with all of the right buyers at the table. If you do it on your own, you got to reach out to dozens and dozens to find hopefully the right one. Mm-hmm. Because not every buyer should be the right fit for the seller, and their cultures might be completely different. You want to bring to the table groups that that seller is really going to resonate with, and say that's a day two culture I want for me and my team. And then you create a competitive environment with that group so that you're getting the best financial outcomes with a group that you can really be aligned with, at least to the best extent that you can. And then it's negotiating with them. And a lot of people, when I was selling my agency, I didn't want to negotiate with my future partner. That felt weird. Going through diligence on my own and getting beaten up and then trying to negotiate back and arguing, that's not what you want, getting into a long-term relationship with a steward of your business.
Right.
And so for us, we would rather do that negotiation on behalf of our clients opposed to letting them do that on their own.
Yeah.
But all along the way, it's really an investment into the outcome.
I want to make sure that people listen to what you said because it is an investment. But one of the biggest things sure, it pays for itself, it's a 10x return, but the real value, in my opinion, is no regret. And actually thinking about, I got the right buyer and I uncovered everything. The money part, I get, you need to make sure that it's worth it, but that to me is the bigger. Did I pick the right partner? Is it the right culture? Do I have regret? Do I feel really good about how my staff is going to continue, how my customers are going to be taken care of. That's the part that I think having someone who's been through it and a perspective, I mean, the money is kind of ancillary in my opinion. So anyway, I just don't want to miss that point, because sure, there's a money component to it, but there's other things that are far more impactful in such a big decision in your life. So anyway.
Beautifully said. The day after the wire hits your account, it's almost anticlimactic. You know, you expect to have the confetti and balloons everywhere, and it's not. It's just more zeros in your account, which is great, and that's super important. That's a driver for what you know, making sure we generate the best returns. But ultimately, most of these insurance agency owners, I know for me too, like the team you have becomes family for a lot of people, and the agency you've built becomes almost like a living, breathing, thing. That, and you're like, you want to make sure that you hand that off the right way to the right people. And so we want to make sure that we drive a level of assurance that that seller made all the right decisions, so that they can live without regret. And they don't ever look back and say, I wish I had. I wonder if I had, or I'm curious if I had done this right, or if I wish I had asked this question. And so, by shepherding them along the process and holding their hand and making sure to be right there for them the entire way, whether it's financial, strategic, or even emotional, psychological, many of the times, that's the support that many people want.
Knowing what you're going to do day two is hard, right? And I think talking through it with people who are on the other side and have done that is incredibly important. I think it's actually what keeps people from getting ready to pull the trigger, is they don't know, what will I do with myself? This is so much a part of who I am. So there's lots of reasons, and money's not the only, and sometimes not the most important part. So
it's what people say matters, but then afterwards it's not as important as what really matters.
So there's lots of people in our industry that are in the space of advising and brokering. What would you say the differentiator is with Legacy? Like, how are you different than all the other choices that are out there?
The easiest way to answer that is we're the only sell-side advisor in this space that has ex-agency owners and PE investors and finance experts. There's a lot of bankers and advisors in and out of the industry that have great financial acumen, that have the experience, and really can generate really good financial outcomes for their clients. But none of them have the level of awareness, knowledge, and empathy that comes with that, because of the fact that we have multiple partners who started, built, and inorganic and organically agencies, and then exited to different partners for different reasons. That experience is so valuable, because when we're going through a process, we know what they're feeling. We know exactly what they're thinking, what questions they should be asking that they're not, and we can really guide them. And I think that creates tremendous trust and a feeling of support along the way. We're also there's a hard line for us. We don't do buy-side diligence. A lot of advisors in the space, that pays the bills, meaning a large buyer will hire bankers and advisors like us to do buy-side diligence on deals that they're trying to acquire, to make sure that they're buying things at the right price. And that pays the bills, it generates a lot of income. We think it's it's a big conflict of interest. One, it's much more fun to work with sellers and help family-run businesses, and sometimes second, third, fourth generations, eke out a few million more dollars and find the right partner. Two, it's just a conflict of interest. If you're getting paid by ABC agency in the afternoon to do a buy-side diligence, and then in the next morning, you're representing that seller to that buyer, are you really objective?
Well, I'll tell you, for me, it's a differentiator. Like, when agents come to me and they say, who should I go to for help? That fact that you've walked in the shoes, and there's multiple partners in Legacy that have walked that, they've taken that journey, it is different. Like, you want someone who has actually been there, had to make those decisions themselves, have to weigh all those decisions, have to think through the process. It's a big differentiator. And I know for a lot of agents that gives them great comfort, knowing that this is someone who understands, not thinks they understand, though they definitely understand.
Thank you for saying that. It's definitely a huge value differentiator. I would also say, though, that if it was only me, we would not be nearly as strong. Or if it was only one of my partners, like Max, who owned an agency and exited, we wouldn't be as strong. The other individuals we have on our team that have the private equity experience, the venture capital experience. We've got 2 CPAs, one of whom did over 100 buy-side diligence deals for some of the largest acquirers in the country before they came to work for us. And what that helps with is, like, up front, we know exactly what the buyers are going to ask for and dig into in the diligence period, so we can get ahead of it up front and make sure that there's less pain and less bumps, and that the deal sticks to the LOI that they set forth. And that's a big piece. You don't want to have 11th hour changes, and that really creates friction that can be avoided up front. So the strength of the team, as you know, is much more than the individual, but having experience running an agency and selling an agency definitely creates a level of empathy and awareness that translates into a ton of trust.
No doubt. Yeah. So I know I shared what my client looks like. What does a typical seller look like for you?
As you know, better than almost anyone, maybe better than everyone, no agency looks the same. Yeah. From book of business makeup to leadership to goals to how they got there, the start of the business, the growth, and everything looks different. And every agency owner considering selling looks a lot different too. What we've tried to do is create 3 personas that we typically see over and over again of sellers. So really there's like 3 main personas. The first is the seller who's looking to accelerate growth. They're the producer that started the business because they were a really good producer. They hate HR, IT, admin, accounting, finance. They really love selling, but they've gotten the business to a point where they're hitting a ceiling, and they're doing so many things. They're wearing all the hats, and they want to go back to selling, and they want to accelerate their growth of sales. And in order to do so, they need more markets, they need better commission and contingents, they want more resources in terms of a parent organization, and they mainly want to just take off all the other hats that are non-sales generating marketing hats. And those seller clients exist. And we're able to help them find the right partner that can help them accelerate their growth. The second persona is the one that we see most common, which is they're not ready to stop, but they want to de-risk. They know that they've built years, decades, sometimes generations, they've built this asset that has tremendous value, but it's illiquid. And they want to be able to capitalize somewhat on what they know current multiple all-time highs and take chips off the table and create that security and that comfort and that assurance that their family's taken care of, that their team's taken care of, that their future's secure, but then also continue. They love goals, they love an earn-out concept, they want to continue to grow the asset. Maybe they love to grow within a larger organization and they want to be a leader within a bigger, and maybe they don't want to completely let go of equity, but they don't need to be a 50 or 100% equity owner of a few $1 million revenue business. They want to be a 1 or 2% owner of a $200 million business, and they can do that through a transition. And the third persona is someone who's looking to exit or just wants new challenges. We've helped people who want to be race car drivers, who want to move on and spend more time with their kids, who absolutely love golf and they want to do more of it, right? Who are just tired. They've been in the business for a long time and they're just tired of doing insurance and they want to move on. They want to just capitalize and make sure that they shepherd the business the right way. And no one buyer is right for all of those personas. And so one big part, it's easy to bring buyers to the table. It's harder to identify all of the right buyers to be brought to the right table based on the seller. And that's a big part of our responsibility, is to bring to the seller a group of buyers that can help them based on what they're looking for and what they look like. And that's a big role that we have. That's why no seller looks the same, but you need to know how to bring the right buyer to that seller based on their goals.
And I think it's really important because that seller can't possibly know what each of those buyers is looking for, because even my knowledge of buyers in the market, it's changed over time. So getting someone like you all involved that can bring those buyers to the table and know what they're looking for and be able to help with that is huge. It'd be a full-time job doing the research, trying to figure that out on your own, for sure.
Yeah, and we don't know everyone in the world. We have 70
Sure.
vetted buyers that we know are the most acquisitive buyers in the country, that are driving the multiples, that have a variety of different autonomous cultures. Some who are going to just say, hey, this is the way we do it. We're huge. We're the gorilla.
Yeah.
If you want top dollar, you want to come in, you got to do it the way we do it. And we probably won't keep everyone. Like, that's not what everyone wants, but
Right.
some people are okay with that.
Right.
And then there's the ones that are earlier stage, and the equity appreciation can be significant, but there's risk associated with it. And they're the ones saying, hey, we're going to be the corporate M&A team and help you with some finance and HR and IT, but you're going to need to continue to grow the business as you know how to grow it.
Right.
And I would add to that there are, it's just as important to know what buyers don't want, to be able to remove them from a process. Because the last thing you want is to get a really nice, juicy offer from someone that it's just not going to be the right fit, or they're going to pull out after the fact because they realize something about the business that they didn't know. So, some buyers, all they want is commercial. All they want is EB. All they want is health. Others, they are cool with personal. They really will pay for it. They want growth-minded, personal agencies. Some only want East Coast. Others want West Coast. Others are okay. It depends on the regional platforms that they have. Some are in their inning one. They're $50 million in revenue. They want to be, $5 billion, and that's a really cool opportunity for some sellers, and that's really scary for others. Some are already $5 billion, and they already have their infrastructure. They really have, strong equity, but it's not going to appreciate as much. And so finding the right buyer based on the book of business that they're looking for, and the location, proximity, the type of leadership, and the level of autonomy that the seller wants is really, really important.
Yeah. So do you find that many sellers change their persona as they go through, like as they weigh their options? Do any actually waver between personas?
Yeah, that's a good question. I would say the Persona 2 and Persona 3, there's some back and forth sometimes. So if you find someone who's, in that next 5 years they were looking to retire, they might come into the process saying that they want to retire tomorrow, and they realize they should probably hold on for 3 to 5 years. Yeah. And others who say, I really need to be out of here in 5 years. And then they realize if I sell, maybe I only stay on a year. Yeah. And I'm really good with this because the proceeds I'm going to get and potential equity and earnouts, that's more than I expected. Yeah. And then for me, when I sold, I wanted to preserve the opportunity. I liked optionality. I said to myself, if I want the opportunity to stay through an earnout and equity appreciation. And if I love life and I want to continue doing this, I want the opportunity to continue to do this. Yeah. But I also want the opportunity to have enough resources and security to say, I want to move on to something new, yeah, with new challenges, with new people, new meaning and fulfillment. Yeah. And I think that's what a lot of sellers want. They want the options. Sure. And so, yeah, you see that persona go back and forth. So I'm an agency owner. And I wish I had known you and hired you when I was an agency owner. We would have made a lot less mistakes. I hire you. I engage with agency focus. Carey, let's start working together. What are some of the first, most important operational changes that you tend to see them make as a result of working with you?
Yeah, I think first and foremost, understanding their numbers, like going through that process and seeing and putting all of the discretionary expenses together in one piece to say, how much am I spending inside my agency, and how could I maybe deploy my resources differently? So the level of awareness of what's happening inside the agency, sometimes we're doing things that we've always done and not paid attention to it. So by us going through and creating a budget and being intentional about what happens could cause people to rethink the technology they've invested in that they've gotten no ROI out of, or was never fully deployed inside their agency. Maybe some of the marketing strategies are killing it and we need to double down on it. Some are, we've done it this way forever and ever and we have no idea how we're measuring it, so we might put things in place in order to measure to see if we're getting an ROI. But I think it's a level of awareness of where are our resources going, how do we compare to other agencies this size, and other agencies this size that are tech forward, that are in the same line as us, if they are personal lines heavy, commercial lines heavy, whatever that is. what is the benchmark? How do we compare? And what is the art of the possible? So the biggest thing is, number one, let's figure out where you are. And that could mean many different things. I've never worked with an agency that we don't look at their staffing. It's just, there's no way not to, right? And what the comp structure is, whether or not it's transferable. If you're looking to sell externally and your comp structure is completely not standard with what's in the industry, it can be a huge hurdle. So figuring out that is almost every single one of our agencies have some comp structure that needs to be considered before they move to the next step, if they're selling, right?
Even if they aren't,
Yeah.
right? That's probably, I would imagine, probably one of the greatest variances from agency to agency is like, well, how they pay their producers, how they pay their staff, depending on the roles they have.
Sure.
How do you navigate that, given that, let's say someone's not selling right away, they just want to have a better idea of how their baseline of their business and allocate resources and continue to grow.
Sure.
How do you navigate making recommendations to changes that should happen for the health of the business,
Sure.
while managing sort of and balancing out the fact that the employees have come to know that as the reality for them?
Yeah, so it depends on what that situation is. Like, it could be just a producer and their comp structure is atypical. I typically will put a schedule together to say, this is what it typically would look like, this is what yours looks like, here's the variances, and here's some ways we could meet in the middle. We could do it over the next 3 years to figure out how to get closer to what the industry standard would be. And you're right, if someone's not looking to sell, they might not be as motivated. So you've got to point out, what is this keeping you from doing? Is it keeping you from having profit that you could invest in a different way in the agency? Many times people will say, I don't know that we can afford to hire another producer, but yet I want to grow. Well, you have to find the thing that they're trying to do and what this is preventing them from being able to do in order to create the situation that they want to change it. If it's serving them well and it's someone that's going to retire, maybe we leave it alone. But if it's not serving them well and it's preventing forward progress that would not maximize the value of their agency, there's lots of ways to rectify it. You could put a deferred comp plan in place. You could put a pathway to ownership in place. You could put, there's lots of different ways to reward these key employees but not have a comp structure pull you back. So, and then, it's not just producers. You have some agencies that still have blended roles where people are doing service and production and they're being compensated one way or the other, but it's not serving the agency, and you're not getting the production or the efficiency out of these people. Really getting clear on what's the role of the person, I think that's one of the trigger points that keeps agencies from growing if they have combined roles. So that is also an area where we spend a lot of time and energy on, and that might be assess your staff. What are they actually wired to do, and what are you trying to get them to do? And let's get your team squared away the way that they should be.
Yeah, that's so important and so well said. There are so many agencies still, probably a majority, where they don't have that classic outside producer hat where it's just this person goes and hunts for business, they sell, and that's it, right? There's so many that have that dual role, and then it's so hard to determine where is the accountability. Like, at 4:30 p.m. on a Friday, someone gets a claims call, a mortgage request, a new business request. What's most important? Like, if I have to do all of it, like, how do I prioritize that? So I know that's a question that I had gotten over the years when we were consulting, and you give your recommendation the best you can, but from the seat that you're in, you can actually say, I've evaluated hundreds of agencies, I've seen it all, and we have gathered all the data, and we have really good benchmarks, and we can offer that type of guidance with assurance.
Yeah, it's funny, some of the benchmarking data drives a lot of decisions, because I can say it, you can say it, whatever, but when you look at it and you're like, okay, this is 3,000 agencies, the accumulation of the data, and you can see growth is thwarted at this point because of these decisions. it gives a level of validity to the advice that you're giving, which is kind of cool. So, and the reality is there is not one way to run a successful agency, but there are trends and there are ways to make yourself more likely to be as successful. So, I mean, that to me is so rewarding to be able to share that with someone and give them confidence, like, hey, this is the right path forward for me.
Yeah, no, that's well said.
Yeah.
The producer buy down piece
Yeah.
is a really big one, because like if someone sells externally, you know, and they don't make that change, they're offering the future owner the opportunity to make that change whenever they want.
That's right.
And they might not for a long time, or they might immediately make a change to a comp structure. And if your producers are going to see that comp structure change anyways, you have an opportunity before you sell to help them benefit from that change up front with, you know, either a producer buy down or, as you said, deferred, whatever you do. So
I think it's such a crime not knowing and then going through a transition and not reaping the benefit of something that could be really impactful in your sale. You know, that there's something to being able to uncover that, and I know they're hard decisions and I know they're tough things to do, but it's even tougher to watch somebody else make the change and reap the benefit of it. You know, like that is not a good day.
next question I have is related to the issues you uncover. We'll call them issues, maybe opportunities for improvement within an agency, because obviously people are coming to you to help improve their business in some way, right? What would you say are the 3 most common issues you uncover through working with a new agency client?
Yeah, so, you know, I think in our world, agents talk to each other and they form in their own minds what their agencies are worth or what the strength of their agent. They think it's a one size fits all. I don't think they really believe that, but the way that they communicate with each other, it would lead you to believe that they think, well, if Matt's agency is worth this and we're basically the same size, my agency must also be worth that. And I think one of the most common things is going through the valuation process and realizing it's not that simple. And sometimes that means they're pleasantly surprised and their agency is actually more valuable than what they thought. More oftentimes they realize, oh goodness, I didn't realize there's risk inside my agency because I'm so busy running the business, I haven't actually considered looking at the business the same way. So I'd say the first thing is really getting a clear picture of what the value is and what my agency's particular risk areas are. The second would be the impact of producer-owned books. Like, I hate when I have to be the bearer of bad news to say, hey, here's the reality. Because you have this contract that's super nebulous and not very clear to anyone, or no contract and have a 1099 producer that has a comp structure that looks like a duck and acts like a duck and really appears that that's a producer-owned book, this is the impact that it's going to have on your agency if and when you decide to contemplate selling. That's sometimes shocking for people because many years ago, that was the thought process of how do you attract great producers is you give them partial ownership in a book, and the difference of partial ownership in the agency versus partial ownership in a book and how different the outcome can be for everyone, actually. So that would be number 2. So what's your value? What do these producer-owned books have? What's the impact? The third one is I signed a contract with a aggregator, cluster, or alliance, and I didn't realize, I knew why I signed it because I wanted access to markets or I wanted something I couldn't get on my own, and I signed it 30 years ago. And what I don't know is there's some barriers in that contract to do what I might want to do. I think there's just things that, man, I did that so long ago and I didn't realize what that meant now in my agency today. So I think those are some of the big things that come through the onboarding process that we dig in and look at the agency a little differently. And they're all fixable. They're all things we can work through. And the earlier you identify these things, the more options you have. The challenge is if you wait and get a valuation 6 months before you want to sell your agency, there is no time to rectify that. And you're kind of, this is what it is, and your options become much less. So I would prefer to have at least 5 years prior to anything, prior to an internal transition, an external transition, whatever that might be. Please give yourself a runway just to get a gut check on your agency. Yeah.
There's so much gold right there with what you said. So let's try to unpack a little bit of each of those. The first one, the valuation piece, understanding their value, but also how that value is derived.
Yeah.
Could you help touch on some of, in your opinion, the most impactful value drivers?
Sure.
Not just how a business is valued in terms of a multiple of EBITDA, but like what you think really drives value at an agency that maybe others wouldn't see.
Yeah, I think the easy ones are: is it growing? Is it profitable? Right. And if you have an agency that's growing, it's doing it profitably, it's going to be more valuable than agencies that are not doing those two things. That's kind of like, here's the bar, we stepped over it. The question is it transferable? And most people get tripped up in this. So let's say I have an agency and I'm growing, but all the growth is coming from one producer that's 70 years old. That's not transferable. At some point, the performance of this agency is going to change because it's hinged on a person that's beyond retirement age. Now let's say that same person is now the owner of the agency, and they have all the relationships with the carriers, they have all the relationships period, and all the staff will only want to work for this guy. This risk became much greater. So you have to look at what's driving the performance inside an agency, and are there areas that if it changes, the performance or the predictability of the performance changes with it. Same scenario, let's say there's 2 producers also at retirement age. Their account managers are also going to retire, and they have niche books. The likelihood someone's going to hold on to those books in that agency is pretty low if they don't have the expertise in order to know how to deal with those clients. So what is the awareness of all the team, not just one person on the team? And do they have the talent, knowledge, ability in order to accurately serve those clients? There's a lot of drivers that have nothing to do with numbers on a page, and it has to do with what can you expect this agency to continue to do into perpetuity if a carrier relationship changes, a niche market changes, people change, the ownership changes. And those are the things that you just don't think about, you know?
That speaks directly to the importance of finding the right partner when you are considering selling, because so often we see just what you said, like a producer-owned book or an agency that's growing because of one producer, an owner that wants to part ways after the sale, a niche that one account manager has expertise in, and that's it. And the risk of transfer is significant, but if you find a buyer who has that capacity and the knowledge base experience, they're going to be much more comfortable with acquiring that asset because they can maintain it and retain it. Yeah. And so if you don't talk to that buyer, that right one, you're going to get a discounted value or not even get a good offer.
That's right.
That's really well said. Do you find that leadership, how much leadership influences the value of a business in terms of experience, tenure, maybe age to retirement or for exit?
Yeah, I think anytime, I have to put myself in the buyer's shoes when I'm asking that question. So the answer is it depends, because the team around you could really change. And if the actual leader is not in the day-to-day, it's less impactful to what that outcome will be. But if the leader is not investing in the agency, not staying up with changes, how customers are changing, investing in technology and investing in processes to be competitive in this environment, that agency is going to fall behind other agencies that are performing differently. So I think the ability to continue to be competitive will change that, regardless if he or she is not the main producer or the main relationship. I think the general environment and culture of that agency will be different. So I think you can stay too long and it'll impact the value of an agency. That varies agency to agency. We're talking in general terms, but you and I both know you've got to dig into every single agency to know what that impact will be. And it makes it really important to have someone with perspective that's seen multiple buyers, multiple agencies, to know what is that true impact to this specific agency. So yeah, it's kind of a loaded question, but yeah, I think it definitely impacts it for sure.
The second thing you mentioned was having a producer-owned book or partial-owned book. I see that all the time too, and it is a really difficult conversation because someone thinks they're worth $10 and they're actually worth $3 because of the ownership is really rooted in the producer, or at least a lot of it.
Yeah.
Is there a strategy that has worked, in your opinion, better than others in terms of righting that ship over time? Because that can't be done right away, but have you seen something work better than other?
Yeah, I think the thing that's been most successful in my experience is, number one, are the producers that have producer-owned books, where are they in their career? And do they have aspirations of staying with the agency or becoming a future owner of the agency? If that's the case, and both parties agree that that's the case, you can change a producer-owned book into minority ownership or phantom stock or something that takes the complexity out of it, and it becomes a win-win for both the owner of the agency and the owner of the producer-owned book, because the parts sometimes and most times are not as valuable as the whole. So if we can get in there and demonstrate that to both sides, that's a win-win for everyone. Sometimes the producer that owns a book or partial book might be at retirement age and that's not feasible. Then it's a buyout. Like if you need to clean it up and just say, I'm going to exercise an agreement, or I'm going to put an agreement in place so we can buy back those books. Because the challenge is, the agency, when you start pulling out producer-owned books, you change the risk factors inside the agency. So the concentration with carriers change, the expectations about contingencies change, the concentration in a niche might change. Like, all of these risk factors can be impacted. It's not just that there's a producer-owned book, but the complexion of what you have the ability to sell becomes different.
And with greater complexity brings a much more challenging acquisition process. The buyer is going to be very uncomfortable if they have a harder time understanding it. And it's harder weighing out the risk after the sale. So that makes sense.
Yeah, and no buyer wants to negotiate with four. Like, they want to negotiate with one, and certainly not minority ownerships. The other thing is, as a buyer, am I creating a competitive environment for what I think I need to retain, so that agency, that seller, could get a discounted price because there's uncertainty. If you clean it up in advance, that's no longer there, which is great. But yeah, it's hard to imagine until you're at the place where you want to sell, and when you wait that long, then it's really hard to fix because you need time.
I like that you said earlier that you would prefer connecting with someone well in advance of any type of exit, because you're so right. If you can work through a lot of that over years, it's much easier, it's much more manageable, and it ultimately drives much better results long term when you do exit. The last piece was one I didn't want to forget. It was the influence that an aggregator or network contract can have on the asset value. And we see that all the time too. There's certain contracts that are very producer and agent friendly, and there are some that are very clawy. And maybe you could touch on what a less flexible, more teethy, clawy, contract could look like, and why.
Yeah, so they're not all created equal, and I don't want anyone listening to this to think that I'm, not pro aggregator. I am. I think they have a incredible role inside our industry. But those agreements are not all created equal, and those agreements inside an aggregator, cluster, or alliance could look different over time. Like, they don't all have the same contract either, which is kind of crazy. I think you need to look at a couple of things. Do I own my whole book? And if I do, great. Is there an exit fee? That's pretty easy. We can calculate it. You know exactly what it is. Is there a first right of refusal involved? And how am I going to be able to satisfy that first right of refusal? So let's say I want to sell my agency. I'm part of an aggregator that has a first right of refusal. I get some offers. I sign NDAs. I get an LOI, but I've signed an NDA. How do I go back to my aggregator with an agreement that I have agreed that I will not share with anyone and satisfy an LOI? It's a challenge, right?
Tricky.
It's a super tricky challenge, and it slows deals down. It slows the process down. It might make some buyers shy away because they don't want to deal with it. That's another challenge. And then some is when you place business through someone else's codes, might there be a competitive for them to hold on to the book that's placed through the aggregator? And do they have the right to solicit that business? As a buyer, I want to know that that is not the case. And if it's nebulous, buyers will discount. Like, buyers only want to pay for the things that they know they have a high certainty of retaining, which makes sense, or they're going to mitigate their risk by making an offer that's lower. So you just need to know, what's the nature of my contract? And prior to it, maybe buy out your contract or exit if there are things that would prevent you from doing that, or choose who your sellers are based on that agreement.
Yeah, I wish you could say that louder.
I know.
There's a microphone that we could like turn up the volume, because that is so insightful and only comes from so much experience of reviewing tons of different contracts, knowing the industry in and out, the influence that a tough contract can have on the business when you are trying to exit, significant. And then there's a lot of contracts that are, like, as you said, very, very plain vanilla. You own the book completely. Maybe there's a set flat fee or a percentage of whatever, you know. And so I know that as an agency owner considering a network or an aggregator, almost no one is thinking about the exit.
No.
Because you are joining
That's not why you're entering.
No, you're joining it to either access more markets, which is probably number one. Increase commissions and contingents, maybe number two. Adding more resources, education, training opportunities, and, like, you know.
Absolutely.
And you're not thinking, you know, this contract could influence my exit value.
Never. That's not part of the decision making, but it should be. Yeah, absolutely. So tell me, we've talked a lot today, and I'd love to know, what's the biggest win for your team? Like, what do you guys you've knocked it out of the park. What does that look like for you?
I'd say one of the things that we're most proud of is the number of our former clients, or at least the ratio of our former clients who are still really happy with the decision they made of who they sold to. We believe that we play a pivotal role in the partnership that they choose, just as much, if not more, than the financial outcomes that are generated. Because squeaking out like a few $1 million more for a family-owned business in a rural setting in America is a great feeling. And I'd say when we started this, that was why what I thought was going to be most fulfilling. And it is, but knowing that a year later, 2 years later, 3 years later, they are really happy with the decision they made. And that doesn't mean that it was a perfect decision, or that everything is like hunky-dory, you know, but they were very aware of the bed that they were making and they were getting into, and they were intentional about it, and they feel like they vetted out all their options and they made the best decision for them. That feels great that we played a big role in that, because there's a lot of agency owners that go through and sell, and they get great financial outcomes, and then day two they're not happy. They feel like they sold to the wrong group for the wrong reasons, and they feel like their team isn't excited and interested in continuing, and that stinks, right? And so I think helping our clients avoid that level of regret and concern is something that's extremely meaningful and makes the job that we do very fulfilling.
Yeah.
I would turn it around and ask you, in terms of what you're most proud of, what's so fulfilling about the role that you play in these agency owners' lives.
Yeah, it's interesting when you ask me that question. I think about specific agents that have impacted me maybe as much as we've impacted them, and there's a couple of them. Like, I love seeing an internal transition happen, and not only the transition happen, but the exiting owner feels confident about the decision they made. The incoming owner may engage us as their fractional CFO because they've never run a business before, and they've got confidence to make some decisions. And they both are super happy with how the performance of the agency continues. So that's one in particular that, you go and you say, listen, these are great people. They know how to run this business. They've built an incredible business, but by bringing our talent to them, they are both incredibly happy with the impact that we've made. That's pretty cool, right? There's others though that never would have acquired. Like, they couldn't pull the trigger to acquire, and now they've got 5 acquisitions under their belt, and they're really seeing the trajectory of their agency be at a different place. Again, we gave them the confidence, gave them the clarity to make that decision. We didn't make the decision for them, but we certainly positioned them to be able to do some of the things that maybe they weren't doing. And then there's some that, when they came to us, we had to give them really not so great information when we did their valuation, and we uncovered some of the things that we talked about. And now they're at the point that they're selling, and they've got wide variety of options ahead of them that they feel prepared, and they feel a whole lot better about the position they're in. So I think, we come into someone's life and they trust us. That's pretty cool in and of itself. The number of people that trust you to see things about their business that maybe aren't ideal, and then you're able to actually leave them better than you found them, is a pretty rewarding thing.
It requires a level of vulnerability
Yeah.
that is very appealing and attractive to people around.
Yeah.
Yeah. I have to say, like, I'm grateful that for this industry for a lot of reasons. I think knowing that this industry brought me to meet you, and when we met, and how close our friendship has been over the last number of years, to know like what you do and what we do are so aligned and supportive of the industry that I feel like I've been able to get so much from. It's just a great feeling, and I'm so confident in the work that you and your team does, and I'm excited to continue to watch you grow and create so much more impact for hundreds and thousands of agencies out there that really do need the support. And whether they know it today or they wake up in a year or 10 years and know it, like they'll definitely benefit a tremendous amount from agency focus and the work you do.
I appreciate that. I love that we're doing it alongside each other. I think it's pretty cool. Our teams are aligned, and it's fun. I love making the impact that we're making. And I think back to when I first met you, and I had no idea, honestly, that what you had done or what your history was. But man, it's been pretty cool building alongside of you.
Hell yeah.
Yeah.